Hello, everyone. Welcome. Today we're going to go over Chapter 4 homework problem. This is a problem on the adjusting um, and closing journal entries. Uh, the Chapter 4 goes over the end of the accounting cycle. And in this problem, which is problem 0405A, the final problem in the homework, we are going to go over a full accounting cycle for this business. And this problem is big, but we're going to break it down step by step so that it's not as challenging. And I hope that by the end of this video, you all will be able to understand how to complete a full accounting cycle for this business. So as we're going through this, it's important to note, it says for the past several years, Steffi Lopez has operated a part-time business. So this is not the first year of operation. So we do have to consider the beginning balances as we go through this problem. It gives us the following transactions for the first page of the journal, and then another more transactions for the second page of the journal. Journalize each of these entries, post the journal to the general ledger, and then prepare an unadjusted trial balance, an adjusted trial balance, and then prepare the adjusting journal entries, and then prepare each of the financial statements. So we're going to go through each of these steps in detail. So the first journal entry is the following assets were received from Steffi Lopez as an investment in Diamond Consulting. Cash of 13,500, and then so we can pull up our chart of accounts and our general journal. And so this is says scroll down to access pages 2 through 4 of the journal. So we just have each of our pages here. And it says we're putting each of these on the first page of the journal. And then, so this one will be on the first page, July 1. And then description. Okay, so we're receiving each of these assets. So cash, accounts receivable, supplies, and office equipments, no liabilities received. So each of these are going to go up. Pretty simple. We have on here, we have cash, accounts receivable, supplies, and office equipment. And then we have to put in the amounts. And then our credit will be to a capital account, which we have in our equities section here on the chart of accounts. Just make sure that you're putting in the correct account, and then which is in the chart of accounts. That's how you know that you're going to have the correct naming conventions, because as this is an online graded homework, it has to be exact for the software to recognize that you're correct. And then the sum of all of our debits here is 45,000, and so that is going to be our credit to our equity account. Second journal entry is paid 2 months rent on a lease rental contract. That's going to be prepaid rent. Date also July 1st. Prepaid rent. And then the post-ref column, we will populate that when we do our posting to our to the general ledger. This is the general journal. And so as we post, to remember that we post each one of our transactions, we're going to add the post ref, and the post ref will be the account number of the general ledger that we're posting it to. So cash would be 11, as we can see in our chart of accounts. But the prepaid rent, we're gonna credit cash because we paid prepaid rent. Our next entry is July 2nd. Paid annual premiums on property and casualty insurance. So that's going to be a prepaid insurance, which we can see is in our chart of accounts. And then our credit to cash. And then the next journal entry is going to be July 4th. Received cash from clients in an advance payment, recorded it as unearned fees. So they tell us that we're going to record unearned fees. We received cash, so that cash is going to be our debit of $5,500. And then unearned fees will be our credit. And a credit always has to be below our debit. And we can check our chart of accounts. Under liabilities, we do have unearned fees as a liability account. Okay. July 5, purchased additional office equipment on account. So debit to office equipment for $6,500, and then a credit to accounts payable for 65 for the same amount. Received cash from clients on account, July 6th. Receiving cash, so debit to cash. And this is collection of the some, but not all of the accounts receivable that were invested in the business initially. And then it's going to be a credit to accounts receivable. July 10th, paid cash for a newspaper advertisement, $400. So that's going to be an expense. And since there's no advertising expense and it doesn't fit into any of these other categories on the chart of accounts, it's going to be a miscellaneous expense. And the amount at 400 is quite small, so that's okay. July 12th, paid office station company for part of the debt incurred on July 5th, which we can see was office equipment. So we're going to debit our accounts payable because we're paying back part of our debt, $5,200, and then credit cash because our cash reduced. July 12th, recorded services provided on account for the period July 1 through 12 at 13,300. So that's going to be a debit to accounts receivable, 13,300, and then a credit to revenue. What is our revenue account? Fees earned. And then July 14th, paid receptionist for 2 weeks' salary. So that's going to be a credit to salary expense 1750, and then we have to make sure that that's in our right box. And then a credit to cash for the same amount. That completes our page 1 of the ledger. So now we'll move on to page 2, which is these transactions here. One moment, please. Okay. Recorded cash from clients for fees earned during the period. July 1 through 17. Okay, so we know that that's this month, and we're recording cash for fees earned. So that's going to be direct, and then the date of the transaction is the 17th. So debit to cash, 9450, and then a credit to fees earned, 9450. July 18th, we have paid cash for supplies. So our debit is going to be to supplies for $600, credit to cash. July 20th, recorded services provided on account. So that's going to be a accounts receivable debit for 6,650, and then the other side of our transaction is revenue, which is fees earned. July 24th, recorded cash from clients for fees earned during the period. So that's going to be a debit to cash, 4,000, and then fees earned. They really are just raking in the money at this point in the month. Received cash from clients on account. So July 26th, they received cash from clients on account, but so there's no mention of for fees earned. They just received the cash for clients on account because they're receiving cash on account. That means that accounts receivable and cash are involved. This is not actually about them earning the revenue. So the cash is going up, and then the others, it's reducing our accounts receivable because the customers are paying their bills. Paid receptionist for 2 weeks salary. July 27th. Salaries expense. And right, I put salaries expense. Salary expense is the exact spelling in the chart of accounts. You must adhere to what is in the chart of accounts. And then a debit to salary cash, paid cash for the salary. And then July 29th, paid telephone bill for July. That's again not in any of these expense categories. So the expense is going to be miscellaneous expense. And let's see, electricity bill, there's also no utilities expense here. So that's also going to be miscellaneous expense. So doing both of these at once, just so I don't have to copy paste more than one time. And then both of these were cash expenses. And then this one was 675. And then also on the 31st, recorded services provided on account for the remainder, July 31st. Accounts receivable, because the services were on account, $3,000, and then fees earned, $3,000. July 31st, paid cash to Steffi Lopez for personal use. This is gonna, Steffi Lopez, as you remember from the problem description, is the owner of this business. Um, so she is owed the earnings, which is going to be an owner's drawing. So Steffi Lopez drawing is going to be our debit because that reduces owner's equity, and then cash is our credit because it reduces cash. Let's see, and looks like we have um, two extra lines. I'm just going to make sure that we didn't miss any journal entries. Oh, we missed um, receiving cash for clients on account. So let me fix that right here. I'm just going to move everything down to here. And I'm going to keep the fees earned because the cash was recorded cash from clients for fees earned 5,200. So we're going to have and right in here, if you didn't catch that, I moved these two journal entries down 2 spaces each. This is also going to be a July 31st entry for cash received of 5,200 for fees earned. So fees earned will be our credit. That's all for the regular journal entries of this period. So what we're going to do is first of all, check our work. And it looks like we did get all corrects on here. The only missing points are for the posting references, which we haven't put yet because we haven't posted them to our, oh, and then also I had a typo here. The amount was incorrect because I had an extra zero. So now what we will need is our posting references, which as you're going through, they're just the account numbers for each of these so that when you post them to your general ledger, you know whether you've posted or not. So we're going to go through and post these to the general ledger now. Um, and our general ledger for cash, let's see, we'll start with cash because it's the first one. The account number is 11. You can see that in the chart of accounts as well. And so July 1st is our first entry, and it looks like we don't have a beginning balance at all. Because Steffi decided to operate this business on a full-time basis. So this is actually going to be the first period of the business, so we won't have any beginning balances. Now, the first transaction is going to be the funding of the business right here with the 13,500, and that's a debit. And then we're going to have our balance column that adds everything up. That's also going to be a debit. And then we'll just keep on adding or subtracting the debits and credits as we go. Posting reference 1, because it's on the first page of the general journal. And then each time we're going to put the date, the posting reference, and then what's the next one that affects cash? Is paying for this prepaid rent, which is going to reduce our balance, but our cash is still positive, so it's going to remain as a debit balance. So if we subtract the 4,800, then our new balance is 8,700. July 2nd, we have another prepaid, which reduces our cash by 4,500. New balance is 4,200. July 4th, another entry on the first page, and it is a debit 5,500 to cash. And as we enter these, we'll enter on here our post reference on all these cash accounts is 11. And this is how we know we've posted this. So just do this on your own to ensure that you remember to post everything. It's a good check. So this is going to increase our cash to 9,700 as our running balance. July 6th is posting reference 1, and then cash, our increase to cash of 15,000 for collecting accounts receivable. Now our balance is at $25,000. Now we're going to have miscellaneous expense that we paid for cash. That's 400. And we'll post that. And that was July 10th. Which makes our running balance 24,600. July 12th, posting reference 1. We had no entries. So actually July 14th is our next cash entry. Actually, no, we did it. Okay, on the 12th, we had accounts payable cash 5,200. 19,400. And then July 14th, we paid our salaries. That was 17,500. Or no, 1,750. Making our running balance 40,000. Wait a minute. 17,650. And that's all for the first page of the general journal. So now from this point on, all of our and posting references will be 2. Oh, and then we have to remember the post ref for this. So cash, July 17th, I posting ref 2, a debit of 9,450. And then the next one is 600 as a credit. Then our running balances, because of these entries, 27,100 and 26,500. July 18th, posting ref 2. Okay. And then on the 24th, we have 4,000 as a debit. And then also 12,000 as a debit on the 26th. Which is going to make our balance 30,500 and then 42,500 respectively. July 27th, posting reference 2. Our amount is 1,750. And then as a credit to cash actually, because it is for our salary expense. And then our amount will be 40,750. And July 29th, we paid out $325. And then the 31st, we paid out another $675. And then these amounts are 4425 and then 39,750. July 31st, we had cash received for revenue of 5,200 to put us at 44,950, and then our owner withdrawal of 12,500, putting us at 32,450. As you can see here, we got all of the entries for cash correct. So we are going to continue to fill out the general journal, the general ledger from the general journal for the rest of our accounts, starting with, continuing with accounts receivable. Accounts receivable is account number 12. And if we go to page 1 of our journal, here we have accounts receivable 20,800 as a debit. That's going to be our balance. Page 1 of the journal. The journal entry was the July 1st initial funding entry. Let's see here. We also have a July 6th entry. And the July 6th entry is for 15,300. And we have another entry here on the 12th. That's a credit to accounts. Oh, that's another debit to accounts receivable. And then the July 6th entry was actually a credit. So see, this is important to double check to make sure that you're entering in the correct debit and credit amount. So accounts receivable credit 15,300, and then we have to actually compute our running balance of 5,500. And then our running balance for accounts receivable, adding the debit of 13,300 is 18,800. Our next entry, I remember, is for July 20th. That's another revenue entry. And that is going to be on the second page of the journal. And we have to add that to our running balance. So our running balance is now 25,450. We had a credit on the 6th, which reduces our accounts receivable running balance. And then our next one was on the 31st, and another revenue entry increasing our accounts receivable So we have our ending balance for the period at 16,450. And we can check our work to ensure that we're correct. Great. And we just have to make sure that all of our posting references for accounts receivable are in the general journal. Our next item is for supplies, which is account number 14. As you can see in the chart of accounts, all of our assets start with a 1, all of our liabilities start with a 2, equities with a 3, revenue with a 4, expenses with a 5. This helps us know the order of liquidity for our that will go on our adjusted trial balance, but also it just helps sort out what accounts uh, are what type of uh, account, and many companies set up this way in practice. So just keep that in mind. So for supplies, our first entry is on July 1st. First page of the journal, so posting ref 1, $3,200. Our next entry is on and we make sure we put our posting ref. Our next entry is an additional purchase of supplies, number 14. Okay, so we put our number 14 post ref in, but it was a $600 debit to supplies. And so 3,800 is our total supplies now. It's on page 2 of the journal, and it was July 18th. And let's see if there's any other amounts in here for supplies. There are no other supplies entry this period, so we don't need to make another entry to the general journal here. However, as you can see in our adjusting journal entries, supplies on hand is 1,525. So we will return to this when we do our adjusting journal entries, and then we'll have to put another entry in the general journal for this. Prepaid rent. Let's see, prepaid rent is here. Posting references 15, because that's our posting references 1 here, but 15 in the general journal because that is the account number. July 1st. And we paid 4,800, and that's going to be our debit running balance. And there is no other instances of rent or prepaid rent. So we're going to leave, we need this, we leave this blank for now. There's going to be an adjusting journal entry for this later. Prepaid insurance is account number 16. And it's going to be a debit of 4,800. Oh, 4,500. I got the amount messed up there, but that's fine. That's why we check our work. And then no other entries for this either. Office equipment. We had our office equipment come in our funding entry, which is account number 18. And we can see that here. We can see that in our chart of accounts. This is July 1st. And a debit of 7,500, and that's going to continue to be our debit. And we never sell this in the quarter or in the month, so it's not going to be an amount for us. Accumulated depreciation will be a adjusting entry later. Oh, we did purchase more office equipment, maybe. Yes, we did. We did purchase more office equipment. So we had an additional transaction here, which is number, once again, posting ref 18. And this is on July 5th, 6,500. And that brings our ending balance to 14,000. Accumulated depreciation will be um, a balance sheet account. Accumulated depreciation will be an adjusting entry. Let's just take a look. Next, we're going to have accounts payable. And we had two accounts payable entries this month. One was purchase of the office equipment, 6,500. On July 5th. And then we paid some of the accounts payable, which was our debit. Also on page one, we paid this on July 12th. And so our accounts payable balance is 1,300. Our salaries payable will be an adjusting entry. We didn't do that yet. We have to make sure to put in our accounts payable. That was number 21. Add that to our posting reference. Our unearned fees, we had July 4th. And it looks like we didn't have any other unearned fees entries quite yet. And then Steffi Lopez Capital. We had our initial funding entry of $45,000. It's going to be a credit July 1st. And we didn't have any other entries just yet, but we'll have some closing entries for those when we do that. And then Steffi Lopez drawing. We did in fact have a drawing on the last day of the month. And that was 12,500. Right? And our equity accounts start with a 3, so that's 31 and 32 right there. Now we'll get into our fees earned account. And our fees earned is account number 41. And we had the first one was on the 12th. Still page 1 though, of 13,300. And then we have to calculate our running balances for all of these accounts still. So our running balance for fees earned when we add the 13,300 to the 9,450 is 22,750. And then we have our other fees earned entry here of 6,000 uh 650 on the 20th. Yeah, another page 2 entry, and that puts our total at 29,400. Additionally, on the 24th, we have another 4,000 in revenue, putting us at 33,400. And then on the 31st, we had two and more entries. One of which was 5,200, putting us at 38,600. And then 3,000, setting us to 41,600. And then the remaining, well, we just went through all of these. So the remaining will be at closing or adjusting entries. And then we have our expenses. So first expense being salary expense number 51. And the first payday was July 14th at 1750. And then we had another payday July 28th because that's 2 weeks later. Looks like they were paid on the 27th, actually. Payday was 1750 once again, bringing our total to 3,500. And then we have our rent expense. Oh, and we have to make sure to add our posting ref 51 to our salary expenses. Rent expense, we only had the prepaid rent so far, I believe. So rent expense is going to be an adjusting entry. Depreciation we haven't done yet, and neither insurance, but we have had a number of miscellaneous expenses. So that's account number 59. And our first miscellaneous expense is on the 10th. And then our next one, we had a few on the, we had one on the 29th and one on the 31st right here. And that's of 325 and 675. And then that puts our total at 1,400 in total here. And then we need to leave one entry blank to do our closing entries later. So we'll check our work. And as you can see, our general journal for the first two pages, we have a full score at 298 and 310 respectively. And then we're still working on the general ledger, but we still have a number of closing entries to do. Had the page number wrong here, so just watch out for that. And then let's take a look at the other items. So going back to our instructions, it says journalize each transaction, post to the journal 4-column accounts at appropriate posting references. We did that. Step 3, prepare an unadjusted trial balance. And it looks like it gives us our accounts in order, and so we're just going to take a look at our general ledger and post the running balances to the unadjusted trial balance here. So our ending balance for cash before it, and now this is before any adjusting entries, which is why we're doing it now and before the next step, which is prepare our adjusting entries. And you just take your balances um, and copy paste them into their respective accounts. Make sure that you have your debits and credits correct. Make sure things make sense, right? Assets are going to be debits, um, that sort of thing. Uh, we have our prepaid rent, and this is also our unadjusted amounts, right? So This is before any adjustments to prepaid rent, any depreciation. So we're going to leave depreciation blank. And make sure to double check your debits and credits. And now this should be the same as whatever you have in the um, as whatever you have in your general journal, but still make sure that your debits and credits are making sense. Now, what is fees earned? We have our fees earned, that's a credit, and then our expenses. And then we have to total up all of our amounts. And so if we total up one, two, three, four, if we total up all these amounts, we get a total of 93,400. And then the other side also equals 93,400. And that is correct here. So see, we did all the work in the general ledger. So preparing the trial balance is actually quite easy. And see our debits and credits match. Everything's been done properly so far. Now for step number 4, at the end of July, the following adjustments. Use this information to complete 4 and 5 and 6. We have an optional item to prepare on your own paper spreadsheet, create an end of work spreadsheet. We're not going to do that. We're going to do this all within Cengage. But you can, if you would like, write this out. It does make it easier to follow, in my opinion. But I can't show you that on my recording. Now we have to journalize the following entries here. So we're going to go to our general journal, and we have a whole nother page um, for journalizing the adjusting entries. Now make sure to do this on the correct page. This is page 3 in this problem, but it'll say journalize the adjusting entries on page 3 of the journal. Adjusting journal entries are recorded on July 31st. And this is important because they're recorded as the last day of the month. That's pretty standard. Um, Insurance expired during July is $375. So analyzing the details of that transaction, the insurance that expired was $375. So that's going to be our expense because that's the amount that's expired and $375. And then we're going to credit prepaid insurance because we're reducing prepaid insurance. Now, for supplies on hand, July 31st are 1,525. So if we take a look at our unadjusted trial balance, our balance on hand now is 3,800, and the balance is supposed to be 1,525. So we take 3,800 minus 1,525, and we get 2,275, and that's the amount that we need to that's our expense. That's the amount of supplies that went away between the unadjusted and the adjusted, right? Because our amount on the adjusted trial balance is going to be the amount of supplies actually on hand, 1,525. And so we're going to journalize that amount as supplies expense. And our supplies expense is going to be what we calculated, which is $2,275. And then it's going to be a credit to supplies. And then July 31st, we have our next entry, depreciation expense. Depreciation of office equipment for July is set $750. That's pretty straightforward. That's just going to be our expense. And we are going to um, send this to our accumulated depreciation account, checking our chart of accounts. Um, it's just it says accumulated depreciation. Sometimes it might say accumulated depreciation equipment, sometimes accumulated depreciation buildings. It could specify, but it also might not specify. And in this problem, it does not specify. So we can put whatever we have to adhere to the chart of accounts, which is just straight up accumulated depreciation. Our next entry is accrued receptionist salary on July 1st is $175. No additional calculation necessary here. It just tells us the accumulated salary is 175. We don't have anything in our unadjusted trial balance for accrued salaries, so we know that we need to accrue the full amount. So we're going to debit salary expense, credit salaries payable. July 31st, our next entry is going to be rent expired during July is 2,400. And the way that's worded, saying that the amount that expired, that's activity. That means that's going to be our expense. If it said the rent unexpired balance, then that would be a balance, and we'd have to adjust the amount to the balance and calculate our expense. But since it says rent expired during July is $2,400, that's an activity-based word. And so that's going to be our amount. Rent expense is our debit. Prepaid rent is our credit. And unearned fees on July 31st are 2,750. And so we take our amount on the balance sheet, which is 5,500, and we subtract. So, right, we have on our unadjusted trial balance, we have 5,500. 5,500 minus 2,750, which says unearned fees on July 1st are 2,750. That's on our unadjusted trial. That's going to go on our adjusted trial balance. But to get there, we have to calculate what it should be. And so taking 5,500 minus 2,750, we get 2,750. So in this case, it's the same amount, but we did have to calculate that to verify. And just because so by coincidence, it happens to be the amount in the problem, it's not always going to be that way. So it's very important to verify. And we're going to, right, our credit is going to be to revenue. And then our debit, we're going to reduce our unearned fees liability. As we check our work, we actually don't need two dates there. I just got a little ahead of myself. And we're missing some points for the posting references. So now we're going to post the journal entries to the general journal or to the general ledger. Um, Starting with supply, we'll just do it in order. So prepaid insurance. We had our prepaid insurance entry was $375, and that was expiring, some of it. Um, Posting reference, this is all page 3 of the journal, and then on our prepaid insurance entry, that's going to be 16 because that's our account number. And one moment here. Then if we take 4,500 minus 375, let's just, so we can get a full view, I'm going to minimize a little bit. Our prepaid insurance balance is now 4,125. Now prepaid rent, we had a number, that's account number 15, page 3, July 31st, a credit of 2,400, and that reduces our amount to 2,400. Next amount is accumulated depreciation, which is a credit, and that's going to be $750. And then our unearned fees, July 31st. Accumulated depreciation, our account number was 19. Unearned fees got reduced by 2,750, and as we know, our ending balance also was going to be 2,750 because that's the amount unexpired, and that was explained in the problem. Our capital account, we did not have any adjusting entries here. Salaries payable, we did. Our salaries payable is $175. And then our fees earned, we had our unearned fees entry here. So that's another 2,750. Bringing our total to 44,350. And then salary expense that increased by another $175 to 3,675. Our rent expense, 2,400. Supplies expense, we expired 2,275. And then depreciation expense, we expired 750. Or we depreciated 750. Depreciate is its own verb. Insurance, we expired We have to make sure to enter our account numbers here. Fees earned was 41. Um, Depreciation expense 54. Insurance expense is 55. And we expired $375 of insurance. Salaries expense is 51. And supplies expense is 53. And then supplies itself was 14. And then rent expense, number 52. Unearned fees was in our liabilities section, and that's number 23. Let's take a look at our work here. We have 42 out of 42 on our journal entries, and then oh, I missed a few debits and credit, a few debit credit mix up here. Unearned fees, using up our unearned fees has to be a debit because it's reducing the amount of our unearned fees. And once again, our running balance is still going to be a credit. So, it's important to check your work as you go through these problems. Now what we're going to do is prepare an adjusted trial balance. And that's going to be taking our ending amounts after all of the adjustments that we've made. So we're just going to go right down the line. Oh, and it looks like here we forgot our supplies adjusting entry. So we have to make sure to post that. And remember our entry was a reduction in supplies of 2,275. And it was supplies on hand. We had to make sure our supplies on hand was 1,525. And there we go. And so now we are adjusted trial balance 1,525. So you can see that's correct. Prepaid insurance. Well, first is prepaid rent actually, which we already have, and then prepaid insurance. Office equipment, 14,000. Accumulated depreciation does go in our asset section, but it is a credit. And then we start with our liabilities. Our drawings are debit, running revenue balance, our expenses, salaries expense, supplies expense, rent expense, depreciation, insurance, and miscellaneous expense. Now, I'll go through here and add up all of these adjusted trial balance amounts, and you can pause the video to add them up on your own if you'd like. So our adjusted trial balance amount is 94,325 for both our debits and our credits. And as you can see, we got 21 out of 21 for the adjusted trial balance. The next step is to prepare the income statement, statement of owner's equity, and the balance sheet. So, if you remember from the lecture on Tuesday, our income statement amounts get taken directly from the trial balance. And we're going to go take a look at our account labels and descriptions just so we know. And then income statement is a period of time, so it's going to be for the month ended July 31st, 2022. Our account, we're going to start with fees earned because that's our revenue amount. And then take the revenue amount directly from our income statement here. And then we're going to labels, it says right here, it says label. So we know it's going to be a label here, and we know we're going to have our expenses after our incomes and then account. So we're going to go by account and we're going to do it in order from least to greatest and then ending with miscellaneous expense. And you can see they're already in order for us here on the adjusted trial balance. That's a coincidence. Um, well, it's not a lot of a coincidence, but anyways, we need to show them in the order from least to greatest. That's how it's presented. And so um, for me, it's easiest to just copy, copy it all in. If it's in red, something's spelled wrong. I caught the 5 and the account number in there. And then amount description. So our amount description is, I believe, total expenses. We're going to subtotal all of our expenses. And so our total expenses, if you add all these up, it's $10,875. And then amount description, what goes up, what's the bottom line of the income statement? That's our net income. It's all about that bottom line. And our net income is our revenues minus our expenses for $33,475. And our income statement is correct, 20 out of 20 for that. Next, we take our information to our statement of owner's equity. Now, statement of owner's equity is also a period in like it's a uh, it shows the changes in equity over time. So it's also going to be for the month ended because it shows a period of time, not a snapshot of a moment in time. That's the balance sheet. So it's going to be for the month ended and then an amount description. So we start with our capital balance as of July 1st, um, which was 0 because we just started business this month. In the description it says she used to have it part-time and she decided to move to rented quarters and to operate the business on a full-time basis and incorporate it as Diamond Consulting. So this is the first period of business. So our equity is starting at 0, and then we have Additional amounts, amount description, investment by owner. That's going to go first. And our, if we take a look at our general ledger for capital, our initial investment here, that entry was $45,000. So that's how much was the invested by the owner. Then our next item is our net income, and that was 33,475 taken right from our income statement. Then our next item is withdrawals. Let me get the spelling for that right off of the labels. And our withdrawals was our dividend that we paid to the owner, 12,500. And then our it ends with our ending amount. So if we add up all these amounts, now with the 12,500 being negative because it reduces our owner's equity, also the parentheses do indicate that it's negative. It's 65,975. That's our owner's equity ending balance for the period. And we'll see that in our closing entries as well. And then if we go to our balance sheet items, we need to take our owner's equity amount. So we can put that in right at the beginning here. Owner's equity, the only amount on here is going to be the account, the capital account, which is going to just be from our chart of accounts, I believe. And that is our Steffi Lopez capital. And we're just doing that first just because it's on the mind, right? And that's the Steffi Lopez's rights to the assets of the business, right? That the assets get divided, the rights, so you have your assets and then the rights to the assets on the balance sheet. The rights to the assets being your liabilities and your equity. And we're going to take the other balances other than capital directly from the adjusted trial balance. But we have to start with our label. Our label being July 31st, because that is the amount there. And then, as you can see, um, we're going to have to make a classified balance sheet because we have some places for us to do um, subtotals here. We have our, so that means that we're going to have to do a classified balance sheet. And so we start off in the order of liquidity, and the most liquid assets are current assets, starting with cash, because what's liquidity? It's how do you convert it to cash? And nothing's more convertible to cash than cash itself. And going to our adjusted trial balance, we can just go right down the line and list out our current assets. And make sure you're listing the correct amounts. And these top 5 accounts, these are our current assets. And so then we have our label for total current assets, and we add all those up to be 56,950. And then we can start with another label being property, plant, equipment. And that's because if you look at our adjusted trial balance, that's our long-term asset that we have. That's the office equipment right here. And then, right, our accumulated depreciation is our amount here, and it displays it as less accumulated depreciation. Our accumulated depreciation is a contra asset, so it's displayed in the assets section of the balance sheet so that we can show our net property, plant, and equipment, which is listed here. Our label is total property, plant, and equipment. And so we subtract that to get 13,250. Then our amount description is if we look at our amount descriptions here, total assets, 70,200. If we add up our current and long-term assets together. Liabilities, all of our liabilities are short-term liabilities, and we don't have anywhere to subtotal anything other than total liabilities. Um, so we'll start out with just labeling our current liabilities, but we don't have to worry about any long-term liabilities. We're only talking about current. And you know that you have to put that there because, right, there's nowhere to put an amount. It says you need a label current liabilities. And then going right down the line, accounts payable of 1,300. Salaries payable, 175. Unearned fees, 2,750. And then our other balance is a capital balance, so that's not relevant to the balance sheet. And then our total liabilities, we add all these up, is $4,225. And then amount description for total liabilities and owner's equity together, because we have to add them together, and it's going to be equal to our assets, but also it's going to foot, if we add it up on its own, $70,200. And that is it for our balance sheet. So now that we have we've prepared the financial statements of the business, um, it's time to prepare closing entries. So we have page 4 of the journal, of our general journal, in order to do this. And what we have to do is close out all of our temporary accounts. Um, we're going to have one for our revenues and expenses and our net income. We have to close that out to owner's equity. And then we also have to close out our drawing account to owner's equity. So we're going to start with our net income one. The date for this entry is July 31st. So we keep everything in the period, and then we're going to start with our fees earned. And our fees earned is account number 41. And we have to debit the ending balance. And the ending balance, so once we debit the ending balance, then the ending debits and credits will be 0. Then we're going to go each of our expenses, we also have to zero out. And to reduce a debit balance, we have to credit it. And remember, our ending balance is going to be zero for all of these. Then we have our depreciation expense. And our insurance expense. And then our miscellaneous expense. And as you can see, our debits are more than our credits. And the remaining credit balance is going to go to our drawing account or our capital account, our share Steffi Lopez capital. And the amount that goes to Steffi Lopez capital is going to be the same amount as net income on the balance sheet, which is our revenues minus our expenses, our debits minus our credits. That gets our remaining credit balance for us to balance at our net income amount of 33,475. And so that's going to increase our capital. Um, so that's going to go on our general ledger as increasing capital. Now our drawings amount also need to be reduced. So we're going to credit our drawings, reduce it to zero. And so our credit is going to be um, Steffi Lopez drawing. And then our credit is going to be Steffi Lopez capital because it reduces our capital account. And that's going to be the full amount of the drawings for the month. I when I was transposing here, I got the rent expense and the supplies expense line mixed up. So our journal entry was correct. And then I just need to enter in the Steffi Lopez drawing closing posting entry. And then our running balance for our Steffi Lopez capital balance. Which was 78,475, and then 65,975. And as you can see, that matches our balance sheet, 65,975. Um, However, that was actually it was a debit. We had to debit our capital to reduce it properly. And our now our total points is correct, 276 out of 276 for our general ledger. So now one final post-closing trial balance. It's our final item for this homework. And now we take our amounts from our our balance sheet accounts, which are our permanent accounts, and we enter them on our post-closing trial balance. Scrolled a little too quickly here. But as you can see, you just go down the line and um, paste in each of the general ledger ending balances into the post-closing trial balance. And that's also going to be exactly what's on um, the balance sheet. And then we add up all the debits and credits. And we can see that our ending post-closing trial balance debit total 7,950 and our liability total 7,950. And that is it. That is it for problem homework 4. Thank you everybody for tuning in and sticking with it. This was a long problem. We went through a lot. We had 2 full pages of journal entry transactions to analyze. We created the unadjusted trial balance from the general ledger. Then we did more adjusting journal entries in the general journal, posted those to the general ledger, created our adjusted trial balance. From that, we created our income statement, our statement of owner's equity, and our balance sheet. Then, once we prepare the financial statements, we close the books for the month and created post-closing trial balance. So we went through a lot. We went through the entire accounting cycle of a business for Steffi Lopez. Um, please let me know if you have any questions. And remember to like and subscribe to the video. Thank you.